You might be wondering, what is an escrow anyway? Once an offer to purchase a home or other property is accepted by the seller, your transaction is placed into escrow. But what exactly does it mean? Escrow is the deposit of funds, a deed, and other items given to a neutral third party for the purpose of completing a real estate purchase or refinance transaction. You might be wondering, why do I need it? An escrow officer or settlement agent facilitates the real estate transaction by managing the disbursement of funds and documents. It provides assurance that no funds or property will change hands until all the instructions for the transaction have been completed. In many states, the escrow officer is known as a closer. In other states, licensed attorneys handle escrows, but often work with a closer from a title company to do some of the processing.
These three parties will give instructions to the escrow officer to close the transaction: the buyer, the seller, and the lender.
The real estate professional provides the escrow officer with the purchase contract and the information necessary to create the escrow instructions. The escrow officer is responsible for adhering to the instructions set forth by the principal members of the transaction and processing the escrow in an efficient and timely manner to meet the scheduled closing date.
These terms often include completed inspections, secured homeowners insurance, completed repairs, paying all authorized bills, fees, and charges, dispersing funds in accordance with the instructions, and providing the closing or settlement statement.
While the real estate professional may recommend an escrow company or officer, the buyer and seller have a right to choose the service provider. You need to know your role. You want to read and understand the escrow instructions, agreements, or terms and conditions. Respond promptly to any correspondence regarding the transaction and direct questions regarding your loan to your lender.
Carefully review the ALTA settlement statement provided by the escrow officer that should match the closing disclosure provided by your lender 3 days prior to signing your closing documents, which will include information like the purchase price, funds that were deposited to escrow or credited to your account, cost of all services, all prorated seller fees paid in advance, and funds required to close the transaction. Also, thoroughly examine all closing documents. Make sure that you get a copy package of your closing documents and safely store your final ALTA settlement statement for tax purposes.
Escrow is different around the country. Real estate practices vary around the country, but every transaction requires a skilled coordination to close. Check with your loan officer to discuss closing customs in your area.
In the Resources Escrow section of our website is a First American document listing state real estate laws and customs that is very helpful.
The settlement agent, which is the escrow officer or attorney, will order the title policies. There are two types of title policies, a lender's policy and an owner's policy. The lender's policy, often called a loan policy, is required by most lending institutions as a way to ensure their security interest in the property. This policy protects the banks and other lending institutions for as long as they maintain an interest in the property, typically until your mortgage is paid off. However, as a buyer, you'll also want to protect your investment and the ownership rights that come with it. This is why it's wise to purchase an owner's policy of title insurance, which will protect your rights as the homeowner for as long as you and your heirs have an interest in the property. Both title insurance policies not only pay valid claims and legal fees to defend against hidden title issues, but they also help to decrease home ownership risk by providing a thorough title search prior to the issuance of either policy. There are various customs regarding the purchase of title insurance. In some areas of the country, it's customary for the seller to purchase the owner's policy for the buyer, whereas in other areas, the buyer purchases this important protection, or it's split 50% with the seller. If you're considering refinancing your mortgage in the future, You may be surprised to see that you are required to purchase a new lender's policy of title insurance. This is because the lender's policy only provides coverage for the life of the loan. When a home is refinanced, the life of the loan ends and another begins. Thus, the new lender's policy of title is required. Because an owner's policy provides coverage for as long as you and your heirs hold an interest in the property, there's no need to purchase a new owner's policy when refinancing. And that covers escrow and title insurance.
Thank you for watching, and here's how you can help us. First, share us with your network on Facebook, Instagram, Twitter, and YouTube. Secondly, tell your family, friends, and coworkers about us. And lastly, we are publicly funded and need your help keeping our videos free by clicking on the support tab today. Don't miss the tips and timing video, found only on our website, for all the ways that you can save hundreds of dollars when buying a home.